the unrest in Egypt has banks and the stock market there closed and has forced the government to put off a debt sale that was supposed to raise 4 billion Egyptian pounds. Well, with protesters planning a million-strong rally tomorrow, the questions now are what's next and what impact will it have on the surrounding region? Eric Fine manages Van Eck G175 strategies and helps to manage the firm's more than $3 billion in emerging markets assets. And he joins us now live here in the studio. Eric, great to meet you. Great to have you in the studio, by the way. And you spent a long time prior to working at Van Eck. You were at Morgan Stanley covering emerging markets. Tell me what you make of this situation. I know you're saying, you know, all the necessary ingredients were there. It just took a catalyst. But what was that specific catalyst? Was it Tunisia? Was it rising food prices? Was it the upcoming election?
I think you phrased it rightly. I think the whole point was the context, and the context was significant disaffection and a political system that's really held together a little too much with repression. The specific triggers might be creating a new narrative. The specific triggers were in Algeria, one man, and another one man in Tunisia. And so I think the fact that those sorts of triggers led to this sort of result tells you everything about the context, about the vulnerabilities, and a lot less about the triggers. Not different than what we've seen in other crises. Greece, for example, there was no real obvious trigger, no real obvious explanation for why a particular trigger brought it to the fore. But the context, the vulnerabilities were known for a long time. So that's, I think, one of the reasons why investors are concerned.
Well, often when we look to the Middle East from the West, from this perspective, we worry about if there is government upheaval. We may not agree with the current regime, but at the same time, sometimes what comes in next is worse. So what is the market saying right now? When we look at, the Egyptian stock market, it looks like it's going to be closed for a third day, but down 16%. This is one of their 30 stock indexes, down 16% in just 2 days last week. We've seen a tremendous sell-off in their bond market. We've seen credit default swaps widen pretty dramatically in the course of just a few days. Is the market overreacting?
I think it depends on what happens. I think there are three political scenarios, basically, and that's what's going to determine whether markets are overreacting or not. In one of the scenarios, the moves the government has made so far are going to be strengthened by Mubarak's leaving, calling for new elections, a lot more in the way of concessions, and it'll be a transition. And in the near term, which the market rightly should maybe only focus on and put aside the long-term implications if they're not focused on Egypt, that's probably an okay result. That's probably the best result. The other alternatives are, though, that this is an attempt to defend the regime. If it's an attempt to defend the regime, it's either going to work or it's not. If it works, that also might stabilize certainly broader markets that will be comfortable saying this is a side issue. It might lead to an existing premium in risk in Egypt and in other related markets, but that's it. If, however, this is an attempt to prop up the regime, to defend the existing regime, and it doesn't work, then it seems as if we'll have a continuation of and maybe even an escalation of what we saw last week.
Regardless of which regime takes over, which way they lean, clearly it would seem that the people there are calling for some amount of economic stability, some amount of employment and opportunity for the younger generation, which makes up a vast portion of their population. So what does that tell you in terms of the way either regime or any number of regimes takes over? Clearly, keeping the Suez Canal open, key to their economy, yet tourism, another big factor in their economy, seems to be at a standstill now and for the foreseeable future.
Yep. Tourism is and always takes a hit during these developments in any country, right? We've seen that in a lot of other countries. It's about 4% of GDP. Suez is pretty important as well, around 3% of GDP. So I think those are two very clear risks that the economy faces. But in the broader picture, Egypt is not one of those countries that once you take away the existing leadership and put in, let's say, some technocrats that really put in what most people consider good economic policies, that the economy just takes off. There are a lot of problems, and the risks of vicious circles, regardless of the political outcomes, is very high. In particular, inflation is high, and it's combined with very high fiscal deficits. So for a country like that, what are they going to do? Are they going to increase spending? in the form of subsidies? Well, there are budgetary constraints. Deficit's around 8% of GDP. Debt to GDP is around 75% of GDP. So that's one potential vicious circle. The other one is through the financial system. As the financial system comes under pressure, the central bank, in allowing the exchange rate to reflect some of this, allowing it to weaken, what does that do to inflation and inflation expectations? So that's another potential vicious circle that any government's going to have to face with.
Eric, we've got about 30 seconds. I want to ask you very quickly, what does this mean for the surrounding regions as an investor? You know, we saw what happened over in the United Arab Emirates. We've seen Abu Dhabi's index fall quite a bit. Dubai took a huge one-day drop. But are there opportunities here in some of this sort of reactionary sell-off?
I think there could be, but I think it's too early to say. There's an irony right now. What is required to tamp down the situation in Egypt, namely Mubarak's departure, let's assume for argument's sake that's the case, what's required to stop Egypt from continuing on its trajectory is exactly what could create or allow broader markets to worry about political contagion.
All right. Thank you so much, Eric, for joining us. Would love to have you back on the show. Thank you very much, Eric Fine of Van Eck Global. Well,